Good morning, everyone. Happy Friday. I'm doing good. How are you? A question for you guys. Did anyone take that lottery trade we just closed most of? Was in pattern trader. It's still going, but figured there was a lot of buyers at 57.80 and I had a hard time getting through there, so that's why I wanted to take most of it off. It's still going. That's why I said leave a runner, but well, we I just sent him a message to take most of the profit. We got about 150%, and then the runner is up 180 right now. Roger will be in just a minute. Cool. Roger is on the way.
Good morning, everyone. Hope everybody's doing great. Yeah, it looks very toppy. It really doesn't look all that great. I'm very nervous about taking long trades. I still like a few, but definitely feel the market is getting a little toppy. Look here. All right. Hmm. Let me just say good morning to everybody. Ken, Gary, Petro, Robert, Brendan, Krish, Ken, Steve, Toppy. I think Toppy's a word. See something here. Stocks that are still looking pretty good though. Yeah, right now what I'm doing is I'm starting to look at shorts that I'm really liking and targeting. I'm being very cautious on the long side right now. I know the market's running up right now, but this is on a Friday without a catalyst, this has me very suspicious. Speaking of suspicious, Matt, why don't you tell us? Oh, Robert, you took the words out of my mouth. I was just going to say, tell us about this pattern trade.
Yeah, we took maybe 120, 130, 150, somewhere around there. And it's still going. So we left our runner on. But you want me to like show you how I found it?
Yeah, should go through the whole process. This is the
Okay.
trading. This is the VIP room.
All
People
right.
love this.
Sorry. I had Chuck messaging me.
That's okay. He
All right.
can.
I'm not distracted now. Okay. I will show you exactly how I found this trade. Let me get my screen shared.
CPI Bodine was revised non. There was no revision. Basically, it was the same. So it was fair for the market.
Okay. So here's the
Cyrus, you're funny. Sorry, go ahead, man.
here's the daily on Oxy right here. And a couple things. One, it has earnings next week. So there's not a lot of positive catalyst. And then also, I noticed this morning, if you look at West Texas Intermediate, here's the intraday over here. So
This
what?
is this is how Matt just generated over 150% in like 40 minutes on a. Remember, I told you guys we're going to start doing lottery trades, lotto trades. This is a lotto trade. Okay, go ahead, Matt.
So this is West Texas Intermediate's future, which is basically American oil, and it was up this morning in the pre-market. It was up really nicely, and Oxy had zero reaction to that. So when I looked this morning, Oxy was doing nothing. So that was one part. The second part was if you look on the daily right here, we've been consolidating or not, we've been stair stepping down basically. And this is the 50-day moving average. So one of two things is going to happen today. Look at the width of the candles. That's one thing. They're always pretty large. It's got a lot of volatility in it. So this is where we were. We were either going to break above the 50-day moving average and break out, or we were going to start to reject and come back down and kind of fulfill this pattern. Now, with earnings being next week, I thought it was very unlikely that this thing was going to start to break the trend to the upside. And Oxy's options are very tight. They've got dollar strikes and they've got weeklies constantly. So they're really sensitive. They're really cheap. The implied probability volatility, excuse me, is really low. So it kind of makes it's a pretty easy stock to do it on. So
Makes
that was it.
perfect sense. Makes perfect sense. And I hope everybody got that. Actually, that was I'll open 1 second here. There we go. I had something I needed to open here. That's it. It's a pretty good way to trade. That's what I'm going to say there. Pretty good way to trade. But I'm going to tell you right now, guys, it's a way you want to trade um very sparingly because it's there's a reason why it's called
Lottery.
lotto.
Yeah.
Right. It's called a lotto trade. Yeah, it was option expiring today.
Today. Yeah.
Look at John up 150. Matt, make sure you
Got it.
repost it. And by the way, that was completely Matt. That was not me. That I had nothing to do with this trade. That was totally 150% Matt's trade. Okay, just throwing it out there. Yeah, yeah. So thank him. Don't thank me. I'm too focused on all the other stuff that's going on around here. Um, Let me just take a quick look at a stock that we currently have in gap to green. Google Trade and gap to green. It's treating us pretty green right now. I think we're doing pretty good on that one. I wish the other two were cooperating, but we're we got to take what the market gives us. All right. So let me begin by saying, let me take over my screen real quick. Carlos, it was a lottery trade. It just we didn't coin that name. That name's been around forever. Some people call them lotto trades, lottery trades. Basically, they're trades that happen. They're trades that occur um,
They're
on
high
option.
risk. Yeah.
It's a very high risk trade. It's a lottery trade. It's called a lottery trade. Okay. That should tell you everything. I mean, if that doesn't tell you everything, what does, right? Lottery trade. But there's a reason why it's called that because it's got a very high risk, very high reward. So if you do it consistently, it makes money over time. But it's not like one of those trades you want to put, your. It's like how I would treat earnings. Okay, I think it has a much better. Actually, yeah, I actually think it has a better win rate than earnings would. But it's how, yeah, highly speculative, where, like playing lottery, like, you drop a nickel to make, $100, and then you lose 50 nickel, one of those. Except this one is not like 1 in 10. This one's more like, what do you think, Matt? Like 20%, 30% win rate?
It just depends on how selective you are.
Yeah,
So I
yeah.
like these trades and I've gotten a lot better at them because the stars have to align a little bit better than just, I think there's going to be a move there on a Friday because this trade worked out a lot better because of where Oxy's price was. It was uh, basically, it was about 58.20 this morning. And that's right. It's really close to 58. The 58 puts her out of the money on a Friday, but it was very easy for them to go into the money. If it would have been trading around 58.80, the 59 puts would have been too. It doesn't work unless it's close to the out of the money to strike because if it's 58.80 and you take the 59 put, because they're in the money, they're a lot more expensive. They're really not a very good deal. And you have a high risk of them going out of the money by the end of the day. And so that really hurts you. Uh, and then it might go, if you take the 58 when it's at 58.80 put, you might get to 58.20. And the real money happens when it's slightly out of the money and it goes slightly in the money. The delta really shifts. So that's where you get the. So if you try to force it, this doesn't work in setup most of the time. Just when it does, it's good.
And just to add something to Ken, you're absolutely right. The 5 minute scan on the dashboard and the trade that Matt is talking about, that's like jelly and and peanut butter and jelly. I mean, that's heaven on earth right there. They're like made in heaven together, to be together. So yes, 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 yes. Because you could see the 5 minute pace of stocks outperforming each other, right? It's very cool. Yeah, jelly inside the donut. That's right. That's right. Anyway, for anybody who's in pattern trader, good stuff. Very, very good stuff. And you can book that trade, Matt.
Yep.
Yeah. Um, let's see here something. Okay. All right. All right. Let's talk analysis. So the broad market. This is the broad market. Let me share my screen
Yep.
too. It's not fun without sharing. Right.
By the way, if you're in it, I would go ahead and take the rest out off probably.
Okay.
It looks like it's consolidating down there. It's up about 200 if you had a runner on.
All right. You can see my screen, Matt.
Yep.
You can see the S&P 500.
Mm-hmm.
Okay.
That
So
nasty red chart.
red chart. What
Yeah,
red?
it has a red hue, and I've never figured out why it does that. But
I don't know. Whatever. So anyhow, here's the daily. Here's the intraday, the 5 minute. Okay. So you could see everything very, very clearly. Um, I'll talk about A and 18 pair if you bring it up just a little bit. Okay. So you could see on an intraday basis, and here's the thing, we're moving up. We're definitely moving up. There's no question about that. The market is literally at 500. It's an all-time high. This is a very high level. The key here now is, are the sellers going to come in and start taking profit at these levels, or are they going to commit higher? I'm I'm a fairly conservative trader. I know it sounds really stupid and weird talking. I mean, we just did a lottery trade and I day trade stocks for a living, and I'm talking about being a conservative trader, right? I mean, it's an oxymoron, but I don't like to take unnecessary risk, and I like to make sure that I like to make sure that my risk to reward ratio is fair, and I don't feel that way right now. I feel it's very unbalanced right now. I don't feel right now. I don't feel like right now the market, especially with this move right here on a daily, I feel like it needs to consolidate. Now, let me just say this: the market can right now come back down here, and the market can just sit right here and just consolidate for. I'm totally making this up for 3 weeks, 2 weeks, and then start going up again. It can do that if it has the right catalyst. But here's the thing. Here's the thing. Let's back up a little bit. Okay? Let's back up. The market is now the market is now going nonstop. I mean nonstop up, like literally nonstop. Let me just pull up a better, easier chart for me to read and to manipulate. Thank you, Dr. Al. So let's just look at this one here. So if you look at the SPY on a daily, you could see, I mean, look at this thing. It's just moving nonstop. And as much as I'd love to tell you this is how the world works, it doesn't. It doesn't work this way. So one engulfing candle and the party's over all the way down to here. So we got to be really careful right now. I like to be dangerous around these levels when we're starting to come up after consolidations or after a pullback. That's when you want to be a cowboy. But this is the time to take your profits. This is the time when swing traders are taking their profits and are holding runners. This is not a time to initiate heavy loads right now. And if you do, you want to be in fairly defensive stocks. You don't want to be in very speculative stocks. Now, Microsoft, Applied Materials, those are big players, but you don't want to be in any wonky stocks right now. Also, I'm very perplexed by the fact that the Russell 2000 is not making swing highs right now. And the fact that it's not making swing highs right now is also very, very disturbing, because typically when you have such a bull market or beginning of a bull run, this sector starts breaking out. And the fact that we're not seeing a breakout on this sector right now, we're not seeing anything good on this sector right now. All-time highs are here. We're here, is discouraging me into thinking we're going to have a nice big fat pullback. Okay. You want to know what an engulfing candle looks like? Right here. Imagine this candle opening up right here, higher, and engulfing this one all the way, engulfing it down. So this bar opens higher and encapsulates this entire price range and then breaks down and closes where it is right now. So all you have to do is just imagine this bar right here starting right here. Okay? Can you do that, Sandy? Imagine that this is all red right here. That's an engulfing, yeah. So if you see that right now, if we have that on the spot, and here's the thing, here's the problem. Okay, earnings on tech are good, but I'll talk about earnings in a little bit. They're fine. They're not great. They're outperforming estimates. Estimates are still revised lower from COVID. Nobody's going to let us forget that. But the point is, what's going to be the next catalyst? Okay, great. We already know that Fed is going to start lowering rates this year. Okay. That's in the market. That's pretty much priced in. CPI, that's what I'm thinking. But I think the CPI is going to splash some cold water at this market. And that's actually why I'm being so nervous right now. Not so much for blue chip stocks, but more for tech stocks. And also, keep in mind, the bond market, we're not moving low, we're not moving higher, we're moving lower. I'll go through that, Stan. We're moving lower, not higher. So this is not a pretty sign. Now, in regards to what Stan just said, let me show you something. I apologize if I still sound a little congested. And this is what I was trying to say, that momentum is narrowing. I'm feeling fine. I'm back to I feel perfect. It's just I sound awful, but I feel fine. So look at the number. We're making all-time highs right now, right? But look at market breadth. 58% of stocks are trading above the 200-day moving average. 51% are trading above the 50-day moving average. Let's look at the S&P. This is what I was trying to say when I was saying that there's more stocks breaking down right now. See, if you look at and we're kind of between a rock and a hard place, Don't want to go too short because we're not there yet, but it looks like we may be getting there. Let me just see something real quick. I don't know why somebody would take. I'm talking to myself. Somebody just took a stupid trade. Okay. So let's look at the broad market, S&P 500. Let's look at momentum levels. Down. So the stock market is making swing highs, but look at the number of stocks participating in the rally. Do you guys see what I'm saying, Stan? Do you see that? The rally is getting narrower. Look at the 200-day line. And I've been saying the same. I've been saying there's more stocks breaking down. There's more stocks low. Look at the 200-day line. You see that, Sandy? See, it's not going up, it's going down. So, do you guys understand why I'm so nervous about the upside in the market and why I am I'm I'm being nervous, and as a result of me being nervous in the stock market, I'm not as hot and heavy on tech stocks, and I'm not as hot and heavy on holding positions much very long, which is why we've been going in and out, in and out, in and out. We have one position right now in the trading pit, and we've had it for 24 hours, and think it's down like half of 1%. It's just sitting there. But if I'm not going to talk about the stock that it is, but it's one of the most bluey chippy stocks that's out there. Okay, it's very blue chippy. I'm not holding a tech it's a very broad U.S. based stock. So the kind of stock you would have in your 401k. I'm not doing anything crazy right now. Although I'm looking to short some things if the market craps out. There's some really good ones there. So yeah, so folks, typically when you see a market doing this, when you see the market doing this, but the broad market doing this, you see the number of stocks increasing. So what are we seeing right now? You're seeing somebody who's running, or a car. You're seeing a car that's driving 50 miles per hour. And those of you who've been with me for years remember me saying this example maybe 7 or 8 years ago. I'm not that original. So imagine you're driving an 8-cylinder car, and the car is driving around the track, and you're just looking at it from a distance, and the car is driving 50 miles per hour. Well, with what we're looking at right now is telling you, hey, now you're driving on 7 cylinders. Now you're driving on 6 cylinders. Hey, the car is not equilibrium, Ralph, lower than equilibrium. It's losing momentum. It's losing momentum. It's losing it's got first. It has to go from being oversold to over from oversold to equilibrium will come after the bounce back up afterwards. But imagine driving a car and your cylinders are popping, but you're still driving at 50. So somebody looking at the outside, somebody looking at this is the S&P. Wow, ippy, purple chippy. We're making all-time highs. The market is looking beautiful. Let's go buy. Let's go. Why, Roger, why aren't you buying? Why aren't you buying? But if you look at number of stocks moving higher, wait a minute. There's only 60% of stocks trading above. That means there's a concentration. Yeah, too few stocks pushing the market up. And look at the 50-day line. We're almost halfway done. This is what I'm saying. Like my list today. Remember when I was coming here and saying I don't have any shorts? Well, My shorts are about 70, 80% of my longs today that I'm going to talk about. So again, we got to be very, very cautious right now. Very, very cautious right now. Extremely cautious right now. Okay. So total earnings, we have about 300 now. This is yesterday's. Are up 4.4% from the same period on 3.5 higher revenue. 80. This is the problem. This is one of the reasons why some of these stocks are moving up. And next week, the second tier stocks are going to be reporting. When the second tier stocks begin reporting, what happens? What happens? You get a much better, clearer picture of the market. You don't have AI. I'm so sick of this AI, I can't begin to tell you. I mean, it's really distorting the market. You're going to laugh about it a couple of years from now, but it's not doing anybody. This momentum shift in AI is just marketing. It's just .com. I remember driving to Las Vegas and counting the billboards with the word .com on them. I remember it like it was yesterday. Matt, you weren't born even back then, but it was like AI. I remember every grandmother. What is your grandson? My grandson owns an AI company, an internet company, a .com. But what did they do? I don't know, but it's .com. Oy vey. I remember, but what does the company do? We don't know yet, but it has a .com, so we can now sell it for $100 million. I mean, that's what happened, folks. That's what happened. Yes, it happened. And anybody here who's older than 40 will tell you, yeah, well, maybe 50. It'll tell you that's really what happened. Do you guys remember? I mean, I know I'm not the only guy here over 50, over 50. Yeah, I mean it, and let me tell you something. Don't think it caught just don't think that caught anybody. I mean, the Bronfman family, the 10 were one of the top 10 richest family in the world. They own Time Warner. They bought AOL. Literally 3 months after that purchase, Yahoo was doing absolutely everything that AOL could do without paying anything. Yeah. Yeah, you didn't have to be 100. But you see what I'm, you guys remember this? You guys remember this, right? I'm not crazy. I'm not making this stuff up, okay? Everybody see this. All right, all right. You all remember this. You all remember. Well, War Dog remembers this. This is what I like about people with experience. You guys can relate. Well, think about what's happening right now. AI. We do AI. Oh, let's sell our company. It's AI. What are you doing? What does this AI company do? what does it do exactly? I mean, we still don't have self-driving cars. Just saying, you know. All right, enough of my rant. All right. It makes me laugh. It really makes me laugh. Tech sector, 74% of earnings, um, 88% beating EPS, 72 beating revenue. Again, you know my reason there. You guys know exactly what I think there. Tech sector is responsible for keeping the fourth quarter earnings growth in positive territory. That what I just said is very, very that's disturbing. Okay. That's disturbing. In light of what I just said right now, this is disturbing, what I just read. The Magnificent Seven combined, the actual results for the six companies that have come out with estimates for the ones still to come, total fourth quarter earnings are on track up 48%. It's terrible. So you guys see what's happening. The writing is on the wall. Now, here is the problem. How long is it going to last? Nobody knows. But we are seeing narrow momentum right now. And that is bad. Let me just check something. I'm looking at a couple of stocks that I really wanted to short. Wells Fargo, for example. Anyway, I'll get into that later. All right. So you guys have the news. You have my 5 cents. Let's talk about stocks. I'll go through the short side first today, and then I'll go through the long side. Got a lot to share with you on this. All right. Hey, Mohammed, how are you? Good to see you there. One second. All right. Sorry, folks. I'm just checking a couple of things here. Give me 1 second. Okay. All right. Carrie's like, I'm already short Wells Fargo. All right. Let's go back here. Let's go back here. You okay, Matt? Yeah. Okay. Let me do this. Z scale. And remember, folks, please take these stocks with a big grain of salt. Please, please, please don't go all in. I don't want to hear you telling me, Roger, they're all down. The market did a 1-2 down to the downside. Don't want to hear that. Don't want to hear any of it. But that's funny, Bodine. Don't tell me. You've been warned. Like the stock, it's a good stock. Stop loss right here, about 235. Option. We need an option. 21 days out to March 1st. March 1st is the default date today. $234, 234 ish, and the strike price we want is 245. No, it's a little expensive, but maybe 250, but you don't want to go any more than that because your delta is just not good. We're looking at Zscaler, ZS. Yes. Next one, DKNG, still moving, still looking good. Stop loss right at right here, the 15-day. Actually, we could just put it right here. There's a 15-day right here already on it. Right here, 15-day, 4066-ish. 21 days out till March 1st. 41 strike price. No, these are calls. These are not puts. I'm starting with I'm doing calls. ANET. A little overdone right now. See, I don't want stocks that are popping like that right now. W. Also popping. Not gonna, not don't like it right now. Here's a new one. This one's fresh on my list. First time I'm looking at it. Less risk coming up from a consolidation. You can't see my screen. Can I what? Call out the stock. Yeah, I'm calling it out. CBay. And folks, if anybody says something here, can you guys just help just tell the crew here what you want, and somebody here will help you and give you the correct ticker symbol. I promise. We got 300 people in the room. Don't be afraid, Carm and Paul. Just post it. They'll tell you. Just 1 second. There's a stock that I'm itching to buy, and 1 second. Okay, now hard to do two things at once right now. Anyways, uh, let's go back to CBAY. Right here, 23-ish level. 35 days till expiration, simply for the fact that we can't go any further anywhere. I'm still there, Les. We're talking about it. March 15th expiration, ticker CBAY. Strike price. Strike price 24 is fine. 24 is fine. You could go 23 or 24. It's fine. The spreads are the same. They both have pretty good. I'd prefer the 23 actually, but anyways. Okay, let's continue. Haven't talked about this stock in a while. Notice it's not a tech heavy stock. Uh, I'd prefer to wait. This is a little too toppy as well. I just don't want to. I don't want to. I just don't like what I'm seeing right now in the market. I smell a rat. So I don't want you guys buying stocks that are so toppity right now. I'm only watching out for you. All right, now here's one that's not as toppity. Stop would go about 72.63. FOUR is the ticker symbol. FOUR. 35 days till expiration, March 15th expiration. 76.50 strike price. CPI, inflation has not been revised lower. It's flat. Even, Perry. It's even. Okay, let's continue. Also, I'm not happy. See, I'm not liking them as much. They're not as tight as they were a week ago. Yes, 67.50. Yes, Angie. Let's continue. MOD. Now, this one's looking okay. Stop loss 67.33. March 15th expiration, ticker symbol MOD. The option spreads are uh, terrible. They're 70, but I don't trust terrible spreads. Graco. I think they do industrial company, and I like industrial company. 85.79. Just do something here. There we go. Okay. I'm just looking at a couple of stocks that are looking interesting to me right now. All right, let's continue. Next one, let's now do the short side, okay? Do I need to say anything else? And I know some of you already took this trade today. Oh, options on GGG. Let me do that. They're no, no, they're bad, 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 bad. No, they're awful. No options on GGG. No, 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 no. Now we're doing the short side. All right. Your stop would go right here at 72. We would now be looking at puts. We would look to March 1st, tickers BILL. We would be looking at the we would be looking at the 72-ish bill, 72-ish on bill. Okay. So, you know what? I'm going to do something nice for you guys. So you can help me. I'm looking at the following stocks right now to go long on this pullback. So I might as well share with you guys. All right. Yes. You're welcome. Just see something here. One second, folks. You missed everything, Matt. I'm just messing with you. Yeah, I'm still live. Yeah, and you're gonna go live in a few minutes. Let's do some more. So I gave you Bill. Next one is Newmont Mining. Gold is breaking down. Thank you. Gold is breaking down. Yeah, those are some stocks that are showing really good relative strength on this pullback on the SPY. Really good relative strength. Now you could see what really strong and what's not. Ah. Okay, let's continue. The stop loss here would be 34.18. This is Newmont, NEM. The option would be March 1st, and we would go to the 37, 36, 37 strike price. They're both great. They're both really good. Modi says, can you teach us on how to you pick option dates and strike prices and concludes yes or no? What? I don't know what you're talking about, Modi, but I didn't see that post. But it's yeah, I'll do it sometimes next week. How about that? I'll do a session next week. But it's in if you are in the trading pit or in the dashboard, puts, not calls, puts, not Susan. These are puts. We're talking puts. If you're in the dashboard, there's a 4-hour class, and I talk extensively about it. And I mentioned it here as well. Okay, let's continue. Let's continue. Okay, all right. This is not a good time for questions, guys. Let me do my thing. If you have questions, send me an email. Next one is CEG. No, wrong stock, not CEG. I think it's LEG. Yeah, LEG, not CEG, LEG. I got a misspelling there. Okay, right here, 2257. Uh, right here, 25 strike price. 25 strike price. 25 strike. Looking at the wrong stock. So rare. One second, folks. One second. I'm sorry that I'm a little slow, but I'm trying to. There's an opportunity here, and I want to take advantage of it if I can. All right. Let's continue. REG breaking down below the 200-day moving average, looking nasty. Stop loss or buy stop right here at about 62.80 level. Puts, obviously, we're looking at March 15th. There's nothing else there. Ticker symbol is REG, and the options are crap, so we're not going to waste any more time with it. Next one is PNW, and that's the last one. Look at the downtrend. There's definitely right now is a good time to start looking at stocks, folks, that are really weak because when the market breaks, those stocks are gonna go to crap. Okay. Um, right here, 68.80. 70 strike price puts expiring on March 1st. PNW. PNW. Right. All right, Matt, why don't you take over? If I missed something or if there's any questions, please, please, please let me know. And by the way, I'm going live in 18 minutes. Matt, you want to post that?
Yep.
All right. And I'll see you guys real soon.
Here it is. Right here. There's the link.
Nice. You want to share your screen?
Yep. Okay, it is Friday, so I do have. I don't know if anyone else knows in the chat. They can say, but I'm pretty sure I was gone or I was working on this right here, which is the seasonality for next week. We get the graphs every Friday, and here they are. Very choppy. Consumer staples is the only thing that looks strong uh, consistently throughout the week. Everything else is definitely looks like it's even shifting to the downside, but definitely choppy. And you might have gotten a whiff that was happening. Well, we've been getting it because yesterday we noticed on the seasonality for yesterday, said that twice. We noticed that on the long side, we had a decent number. We had 250, but on the 10-day hold was relatively weak to the long side. In fact, it was pretty pitiful. It was 55 or 54, excuse me. So we kind of saw this coming, and it looks like it just kind of extends itself next week. All right, here is the long side. Again, we are for the long system for your sectors. We're still mostly green, although we're slipping off. I think tech is probably the strongest looking thing on here. Consumer staples don't look bad. Uh, Basic materials still don't look bad. And healthcare, okay to the long side. Got lagging profit factors on most other stuff, if even if they have accuracy. All right, the short side, sector wise. Here you are right here. Just communication still. We saw that yesterday, but nothing else on the short side for your sectors. And then on 10-day hold, here's what we got. Well, communication definitely seems to be weak. Profit factor of zero, 3 trades, 0% win rate. So this lost money every single time. And then pretty low profit factors across the board. Uh, this technically made money, but also the win rates are super weak. So also another thing that we would stay away from. All right, let's go to the long side. Look at our top setups. You've got pod, 11 trades, 100% win rate, has earnings in about 2 weeks. The chart does not look that great. I would probably skip that one. Here's a good one, folks. MasterCard, earnings in April, 12 trades, 100% win rate. And look at that daily chart. Roger really likes MasterCard as well. It's bounced right off the 8-day EMA. Look at this. That's this move right here, and immediately found buyers who pushed the price right back up. So definitely one that I would probably take. I mean, that's a great trade. Let's look at it's going to be a little bit more expensive, but let's take a look at the options here. Go 21 days out, take the March 1st. I'd probably take the 460s. You could take the 460, and if you needed to do a spread, I would spread it with the 70s. So it costs you about 350 for the options. The spreads, the bid ask spread on the options that's 25 cents, but it's a $5 option. You can probably work that fill. Yeah, mid's 550. I'd get the mid or better, and I'd probably take it right now too. It's not a bad entry spot. Okay, let's go back. Silver looks pretty strong seasonally. On the chart, it does not, though. TPR sneaks in there. That also, what did I just see? Oh, yeah, Tapestry Industries. But it has earnings, had earnings yesterday. It kind of doesn't know what it wants to do. Gapped up, and it's coming down. Now it's consolidating. Might want to stay away from it. Let's keep going here. Uh, I've loved this stock, Ralph Lauren. It's just had earnings. But before that, I loved it. Earnings were good, so that helped it out even more. Now, I don't know. I don't like these kind of gaps. Let's look at tech. It's probably your leader here. 18 trades. That's XLK. But Roger, weren't you saying this morning that you thought tech was the only thing holding up the Qs? Yeah, so they are big and they can move it. So I don't know that that's dangerous to get into tech, but it is dangerous for the market. It's overexposed like that. Corn, good seasonality, horrible daily chart. So probably skip it. You've got, where are these 24 trades? These guys right here. Okay. Booking has earnings coming up and it's a $3,700 stock. So I'm not even going to bother. TER looks not too bad. Looks like it's making its way back up to the upside. It's past the 100 day and the 200 day. It's got the 50 left. If it can get up there, I would be more interested. But right now, it's a big rejection spot or potential rejection spot waiting just about $1 away. And then last one from the list here that I'll look at is LRCX, and that's pretty much already ran away from you. Let's move on over to the short side. Oh, we didn't do the number. It's probably not that relevant. Yeah, number is a B plus. Actually, that's an A. 344, but the 10-day hold doesn't make me feel good about that. And these weekly charts as well. That doesn't make me feel super bullish. Okay. Short side names. Dollar General is pretty consolidative, so I wouldn't take it. Bond is still a short. Could, I don't know. Scares me to ever trade the TLT. Roger's really good at it, but trading the trading TLT, yeah, I don't I don't like to. Uh, Verizon earnings in April, so you're good. 24 trades, 83% win rate. Un- Unfortunately, it might be finding a floor pretty soon here. It has really had some significant downside action, and it's got this 8-day EMA. It's about the, excuse me, that's not the 8-day EMA. That is the 50-day moving average. It's about to butt up on. So big point of support there if you can find it. Rapid fire because I'm running out of time. Yeah, I wouldn't worry about MGM. No. EXE is a possible decent one, but I don't know how much of a move you're going to get out of it. It's at it looks at least yearly lows, possibly all time lows. All right, a couple questions here. What do I think about Tesla? Yeah, it does need to get into the gap. Doesn't look great intraday. It's a hold for me. Yeah, I would again. Roger's nailing that right on the head. The 196.50 level. If I can get in there, then I'd like it upside. But I don't like a downside either because it broke above the 8-day EMA. So for me, it's just hold. eBay, uh, just caught in the middle there. Wow, that's some interesting price action. I wouldn't swing trade it based on that. And yeah, I don't know. If I had to do anything, I would be short. Okay, utilities. Looks like it's basing out. Did cross the 8-day EMA, but if you look right here, kind of look at this channel that it's establishing. Doesn't make me want to go short yet. Actually, looks like a great entry for a long. All right, last one, and then I'm shipping you guys over. Moderna, great short. Although check earnings. Is that earnings in beginning of November, so it's going to be coming up here soon. Actually, I'll tell you when Moderna earnings are right here. $22nd. You got 2 weeks. I'd short it. All right. Here is the link once again, live at noon. I will see you all on Tuesday. I'm out Monday, going to the doctor, and I will see you then. Bye, everyone. Yes, long, Carm.